Save up to $13,000 with a low-interest MBA loan from CommonBond. CommonBond has funded over $1 billion in student loans, and their easy online application only takes minutes. To learn more, visit commonbond.co/touchmba. CommonBond Lending, LLC, NMLS number 1175900.
Welcome to the Touch MBA Admissions Podcast. Do you need help figuring out which schools to apply to or how to get into the world's top MBA programs? Hey, you're not alone. Join thousands of others on this podcast and on our site, touchmba.com, as they seek the admissions edge. And now, here's your host, Darren Joe.
Yeah. Welcome to the Touch MBA podcast. This is your host, Darren. I can't believe it's already May 2017. Time is just flying, but it's a great time of the year for me because this is when I start to hear from lots of listeners and members in our Admissions Edge forum and people who have come to our site for school selection help about their success, about getting into awesome programs in the US, Europe, Asia, all around the world. If you are one of those people, please leave us a positive iTunes review. Tell us about your success or leave a positive review on whatever podcast app you're streaming this on. It just helps more applicants find the program, and I'd really appreciate it. It also gives me and my team a lot of encouragement. If you're not willing to write a public review, just get in touch with me at Darren@touchmba.com. Love to hear about your success. That's why we do the show. But on that note, I think a common problem many applicants have is after they get in, they realize they have a big bill to foot. They have to pay for a lot of tuition. Even if some of you have managed to win scholarships, it's still a huge amount of money. And so this episode, I brought on Phil DeGisi from CommonBond to talk about what you can do now to prepare for financing your MBA, and he also shares kind of the lay of the land, what options are available, and what you can do strategically and tactically to get yourself the best student loans. This episode is really focused on US citizens or US permanent residents looking to finance their MBAs at top 20 schools in the US. But for those of you from outside the US who are looking to finance your MBA abroad, whether that's in the US, Europe, or Asia, or elsewhere, definitely check out episode 86, where I speak with Ricardo Fernandez about financing your MBA abroad. I think that episode will really be helpful to you. But regardless of whether you're from the US or you're an international applicant, I just want to point this out now. I think a great resource for all of you is the CommonBond MBA Student Loan Calculator. Just Google it. And I think it's just a great starting point for you to see, how much this MBA is going to cost you beyond tuition and beyond room and board. So go check that out. Just Google CommonBond MBA Student Loan Calculator and you'll find it. Just a note, in the second half of the episode, we also discuss Phil's experience at Dartmouth Tuck and, what to look for in an alumni network. So definitely stay tuned for that too. I'm really excited about this week's topic and guest because I think it's a topic that not many applicants think about. I know you're so concerned about getting into these elite business schools, but then once you do, and after that euphoria of getting into your dream programs, you realize, oh my gosh, I have to pay for this thing. And so I think, it's really good for you guys to know much more about how to go about financing your MBA and doing it in the way that's most beneficial to you, securing the best loans and paying for this degree. So I'm really excited to have our next guest, Phil DeGisi, who is the Chief Marketing Officer at CommonBond. And Phil oversees the marketing, business development, and creative teams at CommonBond, and he's worked in digital marketing roles and e-commerce roles for a number of big companies and small companies. Phil also received his MBA from the Tuck School of Business at Dartmouth, which I'd love to talk to him more about as well. But Phil, thank you so much for your time and welcome to the Touch MBA podcast.
Thanks for having me, Darren.
Would you mind just giving a quick, 30-second overview about what CommonBond does to sort of set the scene?
Sure. So CommonBond is a tech-enabled lender based in New York City whose mission is to make higher education finance more affordable, more transparent, and easier to manage for students. So we do that through three primary products. One is we offer student loans for students heading off to both undergraduate and graduate studies, including MBA programs, which we'll talk about. But we also offer student loan refinancing, which is helping students save on average over $24,000 over the life of their loan when they refinance their existing student debt after they graduate. And we also offer an enterprise product to companies, enabling them to offer different student loan benefits to their employees. For example, we actually offer employers the ability to pay down their employees' student debt, sort of like a 401k match. So an employer could contribute $100 a month towards their employees' student loans. And we've seen a lot of interest from that as well.
Thank you for that overview. We've heard from so many listeners at Touch MBA. In fact, many of them have written me like, I'm just flustered, right, in terms of how to finance this degree now that I've gotten in. What should applicants be thinking about big picture in terms of getting the best possible loans and saving the most money when financing their MBA?
I think when students are getting ready to think about how to pay for their MBA, the first thing is to take a step back and just understand your financial goals and think about your personal financial situation and goals after school. So everyone is going to be a little different. We've seen some people who say, hey, I want as little debt as possible coming out of school, and I'm going to pay as much as I can out of my savings to cover as much of school. But we'll also see people who say, I'm going to use student debt as a means of ensuring that, hey, I maintain a rainy day fund when I graduate, or I know I'm looking to have a down payment on a house when I graduate, or I'm looking to get married during or shortly after business school. And so I want to make sure I'm maintaining some savings. So the one thing we know for sure is everyone's situation is a little bit different. And it's important to, fill out the FAFSA. That's something that all your listeners should make sure they do, and make sure that they're understanding if they're eligible for any sort of grants or school-specific financial aid. And then once they understand that, they can evaluate the trade-offs between leveraging student loans or savings or other options.
Got it. And FAFSA, just to clarify, what is that?
So FAFSA is the free application for federal student aid. And basically, if you're going to be applying for federal student loans, or you want to be considered for any grants, you absolutely want to make sure that you're filling out the FAFSA as early as possible in the spring, especially. So you can go to fafsa.ed.gov, and there's all the information you need about different deadlines for the FAFSA and the steps you need to take. But it's definitely the first step you should take as you think about paying for your MBA with any sort of grants or federal student loans.
Okay, fantastic. I'll be sure to link to that in the show notes. But what is the common financing path for, most U.S. citizens looking to finance their MBAs in the U.S.? What loan options are available out there?
Once you've maxed out your grants and scholarships, you'll want to understand how large the gap you need to close to pay for school. And as you explore student loans as an option, at the highest level, there's two options. There's federal student loans and there's private student loans. And I'll give you kind of an overview of each of them. Federal student loans, there's two types. There is a Stafford loan, or otherwise called the direct unsubsidized loan. And there's a maximum you can take out of $20,500 per year. And the rate on that is, well, last year the rate was 5.31% with a little over a 1% origination fee. And there's also plus loans. Plus loans don't have a dollar limit on how much you can take out. You can take out up to the full cost of attendance of your school, but it was at a higher rate. So last year it was at 6.31% and carried a 4% origination fee. There's also Perkins loans, which offer a 5% interest rate and about an $8,000 maximum. Those are based on need and fairly limited. Most people will not qualify, but to make sure you're considered for it, again, filling out the FAFSA will make sure you're considered for it. Those are the federal options.
Wait, Phil, I'm sorry. Can I just ask about the FAFSA? So when they fill that out, the federal government will come back to the applicant, or I'm sorry, to the incoming student with all these options.
That's correct. So after you submit the FAFSA, you'll get what's called the student aid report, which gives you information about your eligibility for federal student aid specific to your initial FAFSA application.
Got it. Okay, crystal clear.
So on the private student loan side, you have different private lenders with different features. So I can give you an example of what CommonBond offers on the private student loan side. So we're one of the few lenders that doesn't require a cosigner on your MBA student loans among private lenders. So if you're going to one of our 29 eligible MBA programs and you're a U.S. citizen or permanent resident, all we're doing is a credit check. And if you qualify, you will not need to add a cosigner to your student loan, which makes it very easy to apply and find out if you're eligible for our loans. And our interest rates are highly competitive. So particularly versus the plus loan, we're able to save borrowers thousands of dollars on their student loans by offering a more competitive interest rate. In addition to the savings and not requiring a cosigner, we also have U.S.-based customer service. We have perks like events about career management, retirement, and we also have a track record. We've become actually the largest private lender at a number of the top business schools in the country.
Wow. And that's really what makes you guys and other kind of private lenders who are jumping into this space unique, right? Is that you can offer lower percentages than those plus loans or than the government loans.
Yeah, that's right. We were one of the first to do this in the industry, and at this point, we're one of the few who offer a product like this, and who have kind of experience offering a no cosign, low interest rate product to consumers at top schools.
I'm sure many MBA students are very happy that you've come into the space. And could we also walk through some of the features that applicants should consider when they're getting a loan? In preparing for this podcast, I saw some different features like deferment and forbearance, cosigner requirements, which you mentioned, prepayment penalties, I guess in some loans, and income-based repayment plans.
We can start with, first off, understand the difference between federal and private student loans. There's some key things to understand the difference. So some private lenders will be able to offer you a lower interest rate, which can save you thousands of dollars. It's important to understand what the difference in kind of protections and features are between private and federal lenders. If you choose a private lender versus the plus loan, what are you giving up? Federal loans are eligible for public service loan forgiveness. That means if you work in a non-for-profit business for 10 years and make on-time payment, you're eligible to have your loans forgiven at the conclusion of that. So if you're going to business school and you're fairly certain that might be a career path for you, you may want to consider sticking with the federal loans, even though they have a higher interest rate, if you think you may be going into public service after school for the long term. The other thing that you should be aware of is federal loans offer what's called income-based repayment plans. This allows you to extend your loans beyond the initial 10-year period and pay a percentage of your income towards them. So if you find yourself in between jobs or out of work, or maybe in a lower paying field than you originally anticipated, you would be able to pay a percentage of your income instead of just the fixed payment on a 10-year repayment plan. When it comes to income-based repayment plans for the federal loans, you can extend them up to 25 years. And if you still had a balance at the end of those 25 years, you would be eligible to have that debt forgiven. The important thing to keep in mind with all of this is, A, if you're in a high-paying job after school, income-based repayment won't be something that is available to you. And if you do wind up leveraging income-based repayment and extending your payments past that initial 10 years, keep in mind that you would be paying more in interest over the life of that loan in all likelihood. So those are the two features that federal loans have that a private lender would not. Going back to your initial question about things like forbearance, so CommonBond offers what we call our Common Bridge program, which is if you find yourself in economic hardship or in between jobs, you can apply for our forbearance program, which allows you to pause payments in 3-month increments, and you can reapply every 3 months up to a year straight. With no more than 24 months of forbearance over the life of the loan. So this is a good protection to have in case you do find yourself in between jobs for a period of time and you do need to pause your payments. It's a good option to have. Keep in mind that whether it's forbearance from federal loans or private loans, interest is going to be accruing while you pause payments. One other feature that is that CommonBond offers and similar to federal loans is when you graduate, there's something called a grace period, which allows you to delay starting payments after you graduate for up to 6 months. Let's say you graduate in June, but your job doesn't start until October. You can leverage grace period to put your loans in forbearance during that period of time and not start payment until you start your job. Again, during that time, while they're in the grace period, your loans will be accruing interest, and that interest will capitalize when you enter repayment. But it's a good option to have, and it's something that CommonBond offers as well as federal student loans.
Right. And are there any prepayment penalties?
There are no prepayment penalties with CommonBond nor federal loans. And both federal loans as well as CommonBond offer you a 25 basis points, so a quarter of a percentage point rate discount when you put your loans into automatic repayment. So that is a direct debit out of your checking account each month. You get a rate reduction by choosing that.
Great. And the typical length of the loan at a private lender like CommonBond is how long?
So we offer 10 and 15-year loans, both at fixed rates and variable rates, but I would say generally 10 years is the most common choice.
When I think of what students have to do, big picture, it seems quite straightforward. I mean, in terms of like knowing your own financial situation, going for those Stafford loans, right? Because they have the lowest fixed interest rates currently and lowest origination fees, and then figuring out which private lender or taking those federal plus loans would best fit you, right? But then there's so many of these features to think about, and I guess it really depends on your own situation. But
Darren, if there's one thing I can just add there is, I think one of the things you touched on is it can feel a little bit overwhelming for students. I remember when I was in school and I was taking out my student loans. It's a big decision, and so I think it's important to understand that you're not in this alone, and that there are resources out there for you, even if you've never taken out student loans before. So a few things to keep in mind. Leverage your financial aid office at your school. They're there to help you. I think you'll find in many cases, you'll find that the financial aid office at your school is a great resource to give you unbiased information on what your choices are. The second thing is, if you have questions and you're going to school and you're considering a private student loan, you can call CommonBond. You can use our chat feature on our site. We make it very easy to get in touch, and we'll always try and give people the most transparent information possible. So, for example, last year our rate was lower than the plus loan, but it was slightly higher than the Stafford loan, and we would tell people, hey, take out your Stafford loan, max that out to the $20,500, and then consider CommonBond in your trade-off. So it's very important to us to always try and be transparent with people and do the right thing for customers. But just remember, you're not in this alone, and there's a lot of good resources out there to help you.
Yeah, I mean, one of the best resources I found that I think would be really eye-opening for a lot of applicants even before they've gotten in is your student loan calculator. I found that super useful because you basically pick, one of your member schools, but, that'll be a good enough proxy for many of the top 50, right? Like MBA programs. And then you see literally like what all your future costs will be. And I just thought that was really handy tool to see that number.
Yeah, absolutely.
And just be like, oh my gosh, it's not just tuition. It's so many more things to think about. So, you really need to start planning for that now.
Yeah, that's right. The student loan calculator, we've seen a lot of students engage with it every year. And I think what they like about it is it basically helps you create your own budget. So we start with, hey, what's the cost of attendance for your school? And then you can enter in, hey, I have this much savings I'm planning to take out this much in the Stafford loan, federal student loans. And then it gives you a tool to kind of visualize different choices and trade-offs you can make on how to fund your MBA. So absolutely, we've seen it be a pretty popular free tool that anyone has access to.
Yeah, because it's not just the tuition and room and board and books. Those are the typical things, right? But then you guys have this once in a lifetime trips cushion. I mean, these are things that I've heard from many of our students in MBA programs, like they didn't realize, these extra expenses, right? These trips around the world or different sort of networking things. So yeah, super handy. I'll be sure to link to that student loan calculator. In terms of tactics, what can applicants do now to be able to secure, a great loan with you guys or another lending company?
As we talked about at the beginning, first step is make sure you filled out your FAFSA form. Once you've done that and you understand kind of what grants, any scholarships that you're eligible for, and what the potential gap you need to close with student loans are, I encourage people to start doing their research so they can come to CommonBond's website. We try and provide all the relevant information as transparently as possible, so people can understand what the interest rates are, what the different products we offer are. Yeah, in terms of timing, I think we encourage people to try and minimize the stress of it being mid-August and you're about to head off to school and you realize that you still haven't done your student loans yet. But right now, it's a great time to start doing your research, talking to lenders. We encourage people to call or at least chat their lender online and get a feel for the level of customer service that will be available for them while they're in school. In case they do have questions, it's great to know that there's someone on the other end of the phone who can help you out.
Absolutely. And I'm guessing the applicant's credit score is really important, right, in determining their eligibility? Or is it just they got into a great school, so they're eligible? Can you give us a little bit behind the scenes how that works?
Sure. So for our MBA student loan product, it's basically it's a credit check and just confirmation that you're attending one of our eligible 29 MBA programs. And so it's pretty straightforward. Someone can come to the site, fill out the form in a matter of a couple minutes, and get a really rapid response on if they're eligible. Now, if for any reason they don't qualify with our credit check, they do have the option to add a cosigner to their student loan. And we make that really easy, painless process. And so, yeah, in either case, it's something that can be done in a matter of minutes on the site.
And I mean, I understand that you didn't have the best student loan experience when you were an MBA. Could you tell us what you had to do?
Yeah, that might be putting it lightly. So when I went to business school, I funded the majority of it with student loans. So I took out about $150,000 in student loans. This is going back to 2007. And the interest rates on my student debt was mid 6% all the way up to mid 8%. So really high interest rates. And I always say I wish CommonBond was around when I was in school. I would have been able to pay off my student loans a lot faster at the sort of interest rates that we offer. But it's what attracted me to what CommonBond was building when I joined almost 3 years ago. Was I felt like there had to be a better option for students out there. So, our CEO and co-founder, this was built by him based on his own experience in going to business school and encountering the same thing of high interest rates, poor service, confusing process. That's why we built CommonBond. Was we knew there was a better way to do it, and that's what we've focused on delivering to customers.
Yeah, I mean, did you start paying off your interest while you were a student, or did you wait till you started working?
I was in full deferment during school, and then used grace period and entered repayment at the end of grace period.
Yeah. I mean, is that common? Do you feel like most of your peers and student borrowers do that?
I think it varies. I would say for MBA students, I think full deferment is generally the most common, the common choice. And just by nature of the companies that hire MBAs and what a lot of the students want to do, many of them don't start work until September, October. I mean, some cases even later. So you do see the majority of students leverage at least some amount of that grace period to bridge them between when they graduate and when they start getting a paycheck from their job. But everyone's different. And, we try and highlight the value of, making a fixed payment during school or making interest-only payments. It's a great way to minimize the amount of debt you have when you come out of school. So it's absolutely something we try and display as a great option to minimize debt.
And how many students have you serviced?
So as a company, CommonBond has funded over $1 billion in student loans.
Oh, wow. Yeah, because I know you guys just raised a lot of money as well. So I was just trying to get an idea of the scale of service. Wow. Yeah. Sounds like a big opportunity for CommonBond too. Any last financing tips for the many MBA applicants listening to this podcast?
Yeah, I would say two things. One is start doing your research, talk to lenders out there, talk to your financial aid office. There's a lot of good resources out there, and encourage people to really, really leverage them. The second thing is create a budget. It could be really high level, but create a budget for yourself for school. So, understand what your school's cost of attendance is. Understand if that cost of attendance includes your living expenses, or if you're living off campus. Make sure that you're really taking the time to think through your budget during school of how much you're going to need, whether it's from student loans or your own savings account. So, you mentioned our MBA student loan calculator. That can be a great starting place for people in terms of putting together and kind of understanding a high level budget for school.
And when you say start early, how many months would you suggest? Let me rephrase the question. Like, how long do you think it takes for someone who has just been admitted to, figure out what the best loan is for them? I mean, and secure one. Is it like a 3-month process or 2-month process?
So I can only speak to CommonBond's experience, but if you apply for a loan with CommonBond, it takes under 5 minutes to do an application with us. What happens is once you're approved, we send that loan for approval to your financial aid office at your school. And from there, it's actually kind of in their court. They certify the loan and just say, hey, yes, the student's enrolled at school here, and yes, they're eligible for this amount of student loans. And once they certify it, the loan is then kind of dispersed to the student. And that typically happens around August. Every school is a little different, though, in their timeline. But in terms of what's in the kind of the ball that's in the student's court is kind of making that initial application. That's what they can do early. In terms of what's the right timeline, there's no right answer here. I think the biggest thing is kind of peace of mind and crossing something off your checklist of being ready for business school. That's one of the biggest probably values you get by getting a head start on this now.
Yeah, no, that makes a lot of sense. When 3 MBAs struggled with student loans, they knew there had to be a better way, so they created one. Now, CommonBond is a leading student lender, saving members up to $13,000 on MBA loans. Learn more at commonbond.co/touch MBA. CommonBond Lending LLC, NMLS number 1175900. I'd love to talk to you about your MBA experience as well. I hear so much about Dartmouth Tuck, and I'm wondering, looking back at your career, I'm just wondering, how has Tuck really helped and shaped you?
I don't know that I'd be where I am today without my experience at Tuck, and I don't just mean that because of the amount of student loans that I took out while I was there, and that leading me to CommonBond, but really across a few things. I mean, the relationships I built there, the professors I learned from, but especially the alumni network. They're all things I really still value a lot today. So I'll give you kind of an example or two. Is my internship. I did my summer internship at Walmart.com. And actually, this was before there was even a set MBA internship program at Walmart.com. They had one at their home office in Bentonville, but they didn't have one out in the .com San Francisco office. And so I reached out to a Tuck alum who's pretty senior there, and he was actually thinking about a project that he needed help with, and it happened to align well to my background in digital advertising, and he was able to bring me on as an MBA intern, which was a great experience. And then I actually wound up going back there full time and working in his group after school. So that was my first great example or great experience rather of the Tuck alumni network. The second was when I was actually looking to move on to my next opportunity, and I was actually looking to move back to New York. I had been an admirer of diapers.com, which was owned by this company, Quidsi. Quidsi was co-founded by Mark Laurie, who has since co-founded Jet.com and actually, ironically, now sold that back to Walmart.com. I was really a big admirer of what they were doing at Quidsi, and I was talking to a friend and classmate of mine from Tuck, and she was like, "Oh, I actually know a hiring manager over there." And through that introduction, I eventually wound up finding my way to a full-time opportunity there and wound up joining there and having an amazing 3 years of my career there. So the Tuck Alumni Network, I think, is every bit as strong as advertised. And, I certainly try and pay it forward. And I recruit at Tuck for interns and full-time hires as well now.
Yeah. I mean, is it something that applicants can figure out before they apply and get in? Because it's one thing to read about, like in a brochure or a website, like, oh, our alumni network is, we have 22,000 people and, 150 networking groups around the world. And you're like, okay, that's cool. But what if I reach out to people and I don't hear from them? Like, there's no real way for applicants, I guess, to know that besides asking current students, right? Or alumni? Is there some other way to, because so much of business school is the network, right? And I'm just wondering if there's a way to assess that. Maybe there's some schools that, should get more attention, for example, because of their network.
Yeah, I think there's a few steps I would take in trying to understand the alumni network of a school. One you touched on, which is when you tour the school, ask the students there, hey, do you reach out to alumni? And if you do, are they responsive? How quickly did they get back to you? Are they helpful? Because that's going to be, if you attend that school, that's going to be you. So, take the time and ask the students there that you meet during your tours, and hopefully you're doing kind of sitting in on a class. Talk to the students there and ask. And then, reaching out to alumni, ask, do you hear from students? If so, do you get back to them? And ask them, do you reach out to other alums? there's not an easy metric to measure it. One option is you can look at the percent of alumni who give to the school. It's not the perfect metric, but I think at least it gives you some level of indication of how connected alumni feel to their school. And the one thing I'd stress to people is the importance of the alumni network is truly lifelong. So it's not just about how useful is the alumni network for me getting my internship or getting my full job after business school. A strong network is something that can really aid you in your career as you go, and that's certainly been the experience for me.
Well, that's awesome. I mean, and I guess I have another question. Given your marketing background and your MBA background, do you feel like the MBA is just as relevant these days with basically new marketing channels appearing what seems like every day, new platforms? The industry, at least to me, is just moving so fast. And I'm just wondering how you see, the MBA education and experience, because we have a lot of listeners who want to get into marketing, and how, what would you advise these future marketers who want to get an MBA, who think an MBA can help get them into the marketing industry? Are there things they should be aware of, or advice you've given to similar Tuck students or MBA grads?
Sure. So yeah, I think the MBA is still highly relevant, although we've certainly seen a shift in what MBAs are interested in going to after business school, and B, the types of companies that are trying to hire MBAs. So I think it's as relevant as it ever is in terms of how it relates to marketing needs. If you think about what business schools, the classically trained MBA is going to be able to do, there's somebody who should be able to think strategically, but is generally also pretty strong quantitatively. And as you think about kind of new marketing channels, digital marketing, it's absolutely a combination of being highly analytical and metrics driven, but also able to think strategically about how do you have a test and learn strategy for each channels? How do you think strategically about the messaging? How do you think about which channels to test based on where you expect your audience to be? So, I think it's as relevant as it's ever been. And the best thing that students can do is get hands-on experience in some of this stuff. So if you're interested in going to digital marketing after school and you haven't done that before business school, do a first-year project and run the AdWords account for one of your classmates' startups, or run the Facebook targeting. Learn that stuff hands-on. There's no replacement for getting hands-on channel experience. So with how easy it is to start a company and how many students are going to business school and trying to get their company off the ground, I think there's never been a better time to be in business school and get hands-on experience by just working with your classmates even.
Just reading a lot of entrepreneurship type blogs and authors, there's always this, I'd say, debate over the value of an MBA, and especially in such fast changing sort of markets and industries. And that's I've never thought of it that way. So it's very interesting. Thanks for your time. I really appreciate it and your insights. Thanks for coming on the show.
All right. Thanks a lot, Darren.
Thanks for listening to the Touch MBA podcast. Don't be shy. We have a mailing list. Go to touchmba.com and get yourself signed up. And we'll keep you posted with the best tips and insider interviews on how to get into your #1 school. You can also find us on Twitter and Facebook at Touch MBA. See you soon.